Hello, hi, what's up, guys? This is the third episode of Scalp. So today we will be trying to discuss about the session volume profile indicator and how we incorporate that to this strategy. I already told you about the first video where we discussed about key levels, M15 fair value caps, H1 fair value caps, rejection blocks, which are quite important as well. And in the second video we discussed about opening range blocks, and how we have four different types of setups and what we can anticipate. So we'll go through the last week's price action, and then discuss how we could have utilized that depending on the opening range blocks, right? So let me just open both the indicators. We have the HVN strength, which is the session volume indicator, as well as the opening range block. Okay. So let's discuss last day, and then you'll understand what I'm trying to mean. Okay. I think this would be a better example. Okay, so when it comes to session volume profile, if I order the OR of the ORB, now you've got three lines over here. If you have given the same settings which I've given, you have the green line on top, which is the highest point, or which also will act as a resistance. Then we have the point of control. This is where most of the time the price is reacting or ranging, right? This is also can be considered as the median of the price. And then you have a red line at the bottom which will act as a support. So if you're looking for buys and you're at a key area, this line would act as a support, and then this line would act as a resistance, in other words. Now we utilize this to help formulate a bias or as an additional confluence to what we are going to trade, right? But it's never going to be a hard fast rule about selling at a resistance or buying at a support, right? It's only going to be an additional confluence. Now let's go ahead, see this week's price action. We'll start off with the Monday, this is Wednesday. Yeah, so I think this is fine. So let's start off with Monday, right? Okay, right. So what do we do before 2:30? So this is the 2:30 candle, which will be the ORB, opening range block. Before we on the indicator, we need to go to 1 hour, right? And we potentially mark the key levels, right? We know price is immediately a bullish. The immediate structure is bullish, but overall structure bearish. So we get some sort of an idea depending on that. Now anything on the H1 time frame, only thing that we could think of is this small cap, right? If at all, otherwise there's nothing, virtually non-existent. Then you go to M15 time frame. Anything on the M15 time frame, nothing specific. So this is not a gap as well, so we can remove that. We could mark this key level over here, right? So which can act as an M15 if fair value gap, if price does come over there, right? Now you need to understand, while you do mark these key areas and this gap over here as well, you need to look to the left to see whether price is reacting from one, right? That's important. So as you can see here, price is reacting from the last M15 bearish fair value gap, right? There's no fair value gaps, nothing up to here. So as you guys know, we mainly utilize fair value gaps to decide on price action. We need to let that play. So, and that's the 2:30 candle. So then we open the indicator. So range high, range low has formed. Those are the two main key levels. Then you jump into M5, right? Now you can see here low has been marked. We can play the price action. Now the high. So now what we want to do is remember the 4 scenarios which I spoke about, right? Which is, so it's ranging here. If price breaks below this, then we expect either the price to continue that or the price to reach up to here. So we are either going to target until the ORB high or push back, retest, and then continue sells to a key level, right? And then we utilize the M3 time frame or the M1 time frame depending on the volatility of the session. And then what exactly happens that day is this, right? So you either utilize this for the price to break out, retest, and come down up to here, right? Which is the main target. Now, why do you think we utilize that? How do we come to that understanding? We come to that understanding because we looked to the left, we've marked an M15 fair value gap. We see that during the first 15-minute period, like the 230 to 245 period, price has pushed up, rejected, right, reacted at a key level and pushing price down. So when price breaks down like this, now the possibility, right, the probability of price pushing down, retesting and coming down is higher than price reversing to get this, right? Because without reacting. But imagine if this key level, right, just imagine this key level, the key level was over here and the price reacted from here. Now maybe you could look for a pullback, right? Look at that, how beautiful that price action is, right? So after price reacts from here, then there's no point for you to be looking at sells. So you enter into a trade once price pulls back, retest. Now you know there is an unmitigated fair value gap down. Price is reacting from a key level from the left. So this is the move you will try to catch, right? A simple 1 hour move after an M3 inverse fair value gap or even an M1 inverse fair value gap. Simple as that. But once price reacts from this key level, then you would need to catch this move or stop trading. But in this strategy, we are not trying to take sell from here, buy from here. No, you have to decide a bias. You have to decide either you're gonna wait and take this sell, or either you're gonna wait until it comes down, wait until price taps into a key level and catch the move up, targeting here or somewhere here, but just 1 hour, right? That should be the story, and that's how you're going to trade this. And how you're going to utilize that is also by looking at the key median level, right? You see where the price action buys over here, right? So beautiful. It reacting an M15 fair value gap, push down, and then also reacting at the point of control. That's where the price is pushing up. That will give you more confidence when you're looking to buy. See, you see the price line is there, you see it reacting to the pip, right? So beautiful, to the pip, and then that will give you more confidence into saying, okay, this is a better area for us to look for more buys. And once you have some sort of confirmation, pull back and then down and then pull back, and then you have an order block formed, right? And then react and then price. So price is holding for higher price action. You know it's reacting at a point of control as well. That's when you look for buys. So beautiful, beautiful price action over there, right? So that's on the Monday. So just one setup a day, 2 losses maximum. What happens after that should not be your problem. Do not try to catch every move in the market, understand that should not be your main concern, right? Okay, so now we are coming into Tuesday, right? So what happens again, you have to ideally mark the M15 fair value gaps. Is price reacting anything from here? No, right? Any M15 fair value gaps, nothing obvious on that side. Anything over here? Nothing. So we'll switch to 1 hour. But let's remove this for now. Switch to 1 hour. Right. So in 1 hour, what can you see? Okay, price has most likely a bullish price action, unless price tries to make a reversal. Any key levels? Well, the only key level I could see is somewhere way down here, and then there's also one over here, but these are H1 lows. But apart from that, anything on the M15? Anything on the M15? Okay, beautiful. We have an M15 fair value gap over here. We have an M15 fair value gap over here. Nothing much on this side. Any rejection blocks at all? These are there, but you can see here how prices reacted, right? So beautiful. You see how prices reacted and then push up. So you have to stick to one strategy, right? Not to try to trade everything. But we also have a key level over here. This is just the key levels if we think that the price could react to it. Now understand, if price moves away without us, then it's just not your day, right? Just not your day. The first 15 minutes you don't trade. You can jump to 3-minute time frame. Okay, beautiful. So range high, range low. Understand, we don't trade until the price breaks above or low. So you wait for the price to drop down. Okay, you have the point of control here, you have the support here, so resistance there, and the support over here. So you can look for sells reacting from here down, and then you can look for buys unless the price pushes up, right? So that's why you need to wait patiently. That drop down, is price reacting from there? There is a breakout, as you can see, 3-minute has broken out. So same story again. Is price just gonna reach here, or price gonna push down, right? And what basically happens? What do you think that basically happens that day, right? Price goes up to collect it, right? Now if someone had argued, right, no, for me this looks like a sell, let me catch a sell, especially price drop down, push up, drop down, push up again, and then there's a rejection here. For example, this one. Okay, rejection here. Do you see how there are no fair value gaps for us to enter into a trade? There's no inverse fair value gaps. There's nothing that's making the price action clear, right? On M3. So you can maybe drop down to M1, and then maybe your bias was okay, breakout, retest, and then sell. Then of course you can take into a setup if your whole bias was buys, right? Sells, and then you can take a loss, a valid loss, if it was a loss at all, right? Now the other person would think, okay, no, we are at a point of control here. Yes, we have a resistance over there as well. Price is extremely bullish. We'll wait for a better setup. We'll wait for a reversal to catch the buys. But if you took a sell and you took a loss on this day, I think that would be a valid trade for you to take a setup, right? Now the patient person, when there is no clear structure, especially on 3 minutes, right? When there's ranging, no proper inverse fair value gaps, what they would do is, okay, listen, price action is broken up. Now this is a fair value gap where the price should hold at last for bullish price action. The open end range block is over here for us to target high. we've got a beautiful manipulation over there, and that would be the range where you would target. Now, once price takes there, you can monitor these levels to see whether they have any sort of a reaction, they have any sort of a pushback to get up, right? But my whole point is, if you took a sell and you took a loss here thinking that the price would push down here into these key levels, that's a valid reason. But understand, because it's all ranging here, break out here, buys again, then sell again, then buy again, you're in a whole lot of confusions, and there's no clear structure into it. So at that point you can avoid, but if not, you can continue to look for sell. That would be a valid sell, especially with this 3-minute reacting at point of control. Then you're looking for a sell, right? Apart from that, you cannot capitalize any move. So basically, if you miss this move, this buy to up to here, that should be your day. You shouldn't be looking for any trades. Okay, so let's look at the next day now. Yeah, okay, so what do we have here? Just mark the key levels, and this is reacting at this fair value gap, which we marked on the previous day, right? So previous day fair value gap taken as marked. Okay, price is rejecting from there. We have H1 FVG over here. We know price could react from there as well. Anything else to react? Okay, we've got one over here. Okay, we got one over there as well. So we can look for or anticipate to look for sells from there, right? Then you can switch to the M15, right? So if this breaks through up, then we can use this as an inverse to look for buys, because price is reacting at a key level, right? So then we play the next candle, right? Now this opening range block, if you can see this, right, how aggressive this move is. So this is the block. Now this is the breakout in 3 minutes. Clearly price is showing a bullish strength, right? It has to come back to retest to push up, or we trade down, right? Basically 2 scenarios. That's what we are looking for, right? Now how do we what kind of confluences we use? We can use the lines, right? That's why volume profiles are, that's why we utilize them. And what happens exactly, if you can see, reacts at this key level, range block, retest, and goes exactly the way we marked, right? Push up. Why? Because there was no key levels onto the left where the price could react to for a sell-off, right? So our main expectation was breakout, retest, and buys again, right? Simple. So what did price do? Push up, reacted at the point of control. We inverse this fair value gap, right? Inverse this fair value gap. That's all we wanted. Push up, and then you look for either continuations after this breakout, and then target. Simple setup, right? So either 1R or 1:1.5R, depending on what your preference is, right? Simple, at least until the resistance level, right, which are session highs. So that's why I said you have a bias and you take a sell, simple as that, or a buy. So this was that day's setup. Any other day, if there was a key level here, then we could have looked to target down here up to there, right? Simple. So Monday and Wednesday were clear days, and Tuesday, yes, of course, you could have taken a valid loss. Okay, right? Now this is on Thursday, right? So what happens on Thursday? If you guys noticed, so we mark the next hour candle as well. So New York opens as 1 p.m. clearly bearish, right? After 1 hour fair value gap over there. We jump into M15. Okay, that should be the opening range block, right? How it swept the low and then pushed up. Anything else where it's reacting to swept the Asia low as well, right? It has swept the Asia low as well. So we switch to M15. Any M15 fair value gaps? Yes, of course. It's reacting from this key level. Right, reacting from this M15 fair value gap. So okay, fine. Now we mark the range block high or low. Simple. Okay, now there is no breakout yet, right? We need to have a breakout. Remember, that's the first thing. We're ranging still. Good. Okay, that is technically a breakout. You can see here close below. Now technically a breakout. Now are we gonna look for buys or sell? That should be a question, right? That should be a question. So is price reacting on the left from a specific key area? No. Is price reacting? Is price respecting the session volume profiles? No, it's extremely bearish as well. So ideally we would want to look for a sell setup, and that's when this becomes inverse over here, right? Inverse, and then closes down again, creates new inverse fair value gaps, and then breaks below. Then you would look for a sell. So basically on this day, right, the same setup I explained: push down, up, retest, and then like this setup. Why? Because we are coming off, we're delivering price action from a key level, nothing onto the left, extremely bearish, and then that's when you would catch the 1:1 R. Simple as that. Okay, so break and retest over there as well. Let's go to Friday's price action now. Right. Cool. All right, so what do you think that's happening in New York now? Right. Any H1 fair value gaps? Nothing, none that we could see. Go to M15. Right, we have a mark over here. Anything on the left? Anything on the left? Nothing. So all sell side imbalances have got filled. We have one last one here. That's the only area the price could react, right? So we wait for 230. Okay, and then one more. Right. Switch to M3. Okay, what can you guys see here? So this is the range low, this is the range high. We've got a breakout. So volume profiles are off the chart. So what can we expect? We've also swept the Asia lows as well. So two options, either you target the opposite or simple retest and sell, right? And how do we confirm that? By looking at M15, looking at all the other key levels, right? So we have a M15 FEG here as well, new one that's formed. Price pushes down, it's going up. Now what most people would try to look at this is this one, right? They will try seeing that price action and then try get involved with it to look for price. But you have to understand, on the left side there's literally zilch, right? There's literally zilch. So there's no point in you trying to get involved with it. Of course, yes, you can catch a buy, but you have to understand what's more probable in this bearish price action. Is a break and retest and sell, or a break and reversal. So if price is pushing down like that now what we need to ideally see is a retest and a look for a sell, right? Especially because all these levels are out of range as well. This was the support which was supposed to hold the price up, and that has failed to hold the price up. And you know what happens when it fails to hold the price? Same thing as there, fails to hold the price, pushes down, up, retest and sell. Same way as here as well, right? So ideally those should be your setup, right? Looking at here, look for this to get inversed, but we cannot enter a setup here unless price pushes up and then rejects for it, then we can enter. But what do we see here? There's no clear inverse, right? There's no clear inverse of the M3 fair value gap. So then we will not be entering into a setup to look for sells or get into a losing trade unnecessarily, right? Get into a losing trade unnecessarily. So then pushes up, no inverse, there's nothing clear yet. So you could patiently wait until you find a clear setup. And when will you usually find a setup? That's either when the price goes up, reacts, takes the opening range block, right? Takes the opening range block, and then you have this one break below, and then you can have that sell you want, right? So that's how you avoid taking unnecessary loss, even though you are bearish over here and over on this M15 as well, right? I hope that made sense, but this is just me showing 1 week's price action, right? The last week's price action, but you guys need to go through on all the other weeks as well, test and see how this works, how the session volume works, how the opening range breakout works as well. Key things for you to remember is that you have to mark the range, wait for price action to either form or have a breakout, retest and go up, right? Or break out and then do this literally, and then you try to catch a sell. Those are the two main options. What happens when a breakout? If it breaks out down, pull down, reverse and then does this, or breakout, pull down, up over here, but doesn't inverse, then pushes up, which is the move you will try to catch, right? And that is the exact move. This one is the exact move that happened here, isn't it? That happened here on Friday. So you guys need to understand about the pattern and try keep in mind about how that works, right? Breakout, push down, pushed, failed to reverse, created a new high. Now we are looking to buy up to there, so you enter a buy setup over there, wait for it to retouch, take the high, and then sell after that. Alright guys, that was a quite long, about 30-minute video. Hope things are clear. I know it's a bit complicated, but understand it's not easy, as it's like, okay, you sweep the low, enter into a buy, sweep the high, enter into a sell, right? You need to understand about market structure, general market direction, and then utilize the indicators, and then utilize the opening range block for you to enter into a proper setup. So maximum 1 or 2 setups a day, ideally a 1, target of a 1 to 1.5, right? Let me know on the chat if you want to back test this strat with me, or go through more examples to clarify our doubts, and I'll be more than willing to help you guys. Yeah, cheers, have a great weekend ahead. I will be off for about 10 days as I'm going out of country, so I'll be busy away with my family, but I don't think that I will be able to post any new content for about 10 to 12 days, right? Good luck, cheers.